Okay, that was let's get some 10 baggers. That's our goal for 2023. All right, welcome everybody to Wall Street Reporter's next Super Stock live stream for January 4th. This is our first live stream of the brand new year. And look, we're ready for the 10 baggers. Look, the goal of our program, next Super Stock, is to bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point right now, and they have multiple catalysts in place, multiple shots on goal for potentially a 10x. And we're back with AIML Innovation. Tim Daniels, the chairman. Tim, welcome back to the program.
Great to be back, Jack. I always appreciate being on your show, and I'm honored being the first guest of the new year. It's a real privilege for me.
Tim, this is very auspicious, Tim. So we're here's the thing: the company right now, we've been through. I think AIML. You first came in the program almost 2 years ago, and there's been ups and downs as the company develops the technology. Because I talk about this. I don't want to plug my book. I don't want to plug the Amazon book, but the stocks that go 10x to 100x. I found that it's not a straight path. It's not a straight path, and you've done. I mean, Tim, you've been in this business for a long time. You were in the investment banking business. You were CEO of other companies, and to get to a 10x, sometimes it's a circuitous path. But I think right now there's some really exciting news, which we want to talk about. Some other key catalysts, which really could position AIML for that 10x potential in 23.
Mm-hmm. Sure. Yeah. So I guess the first thing we should talk about, Jack, is the news that we came out with just today, which is kind of a follow-on to a news release we made last year, where we announced that we were granted a U.S. patent for our technology. And let me just spend 1 minute on that. We have been given a patent by the U.S. Patent Office for multiple configurations of wearable health monitors. This is our specific version of the health monitor. Can you see it on there? Okay, Jeff?
Absolutely, yeah. I love the orange strap, orange rubber strap.
Yeah, exactly. It's a nice touch, isn't it?
So the wearables market, for anybody that's bringing the wearables market, the market that you're going to, it's a 20 billion plus market, and I think we were talking before. You said it's going to go to, I think the number is going to be like 90 billion in like a couple of years. It's a 20 billion market right now. You got Fitbit, you got all these companies out there, and apparently some of them could be infringing on your patent, which is could be a big opportunity for AIML. But there's other elements to the story we're going to talk. AIML is not just an IP litigation business. I mean, there's a lot to it. But let's start off with this, because this is big news. I don't think people understand how big this could be.
Yeah, sure. And let's start with that. But as you just said, that's the tip of the iceberg. That's not our business model. We're not, a litigation company. We're a company who's developing relationships throughout North America and now internationally as well, outside of North America, with strategic partners in the healthcare industry with respect to the use of our wearable solution. Now, our solution is a three-part solution. It's a wearable like this that aggregates the biometric data from the user, combined with a phone app, which applies our proprietary artificial intelligence to improve the readings and the feedback to the user, and all of that is then put up into a cloud platform, which is available on a subscription basis, which aggregates all the data for the user over days, weeks, months, and years that the user, their healthcare team, doctors, nurses, pharmacists, therapists, and so on, can all have access to on an ongoing basis. So it's a complete end-to-end solution designed to give personal and immediate and actionable feedback to the user with respect to their ongoing health concerns. So that's what we do as a business. But what
how many patents do you, I mean, look, you have a very broad patent position. which like touches a lot of these aspects that companies like, I don't know if it's Fitbit or Apple or whatever, but there's a lot of these guys. I think Whoop, WHOOP. That's another.
Yeah.
So there's a whole bunch of these guys out there. I think Google owns them, but there's a whole bunch of these guys out there, and it looks like, I mean, based on my understanding, is that they could be infringing. And here's what we know. We know there's validity to this because you already had, I think this last time we were on, you said you had a company that came to you voluntarily. They just contacted you out of the blue, saying, hey, we want to license your technology because we have a device. We wanted to get a patent on it, and we checked, and apparently you have the patent. So, we'll take
you. You're absolutely right, Jack. It's a company out of San Diego by the name of MedWatch, which is developing a non-invasive blood glucose monitoring device. And they went to patent their device, and lo and behold, they found that we already hold the patent on it. So they did the correct thing, and they came to us and said, yeah, we want to license this technology, and you've got the patent, so let's do a deal. And so we did. So for the next 25 years, we get $10,000 per month cash, come rain or shine, plus 3% royalty on their sales, their direct sales, plus 10% on third-party sales.
This is like one tiny company. This is like one little company. And again, it's a very small company, but the whole business is so this is a drop in the bucket, but I think it's very important. It's a very important first step because this kind of validates what we've been talking about. Because listen, nobody contacts you out of the blue and says, hey, here's money. I mean, unless they have, so it tells me that there's something to this. So bottom line is where are you at now? Are you talking to, how far are you in conversations? Are you talking to law firms? Do you have a short list? Where are you at?
Okay. So sure. So let me just back up and talk about the patent for 1 second. So our patent covers the multiple configurations of wearable devices for the purpose of aggregating biometric data, and that biometric data includes heart rate variability, blood pressure, ECGs, blood oxygen level, blood glucose, body temperature, and a few other measurements. So
you're covering everything, basically.
Right. So basically, our patent that's been granted now by the U.S. Patent Office covers the use of a wearable for all those purposes for the ultimate goal of monitoring and improving the health of the wearer. So I want your viewers out there to do this mental exercise if they're, a patron of the Apple Watch or Fitbit or Google Watch or Samsung, and say to yourself, does my watch measure my blood pressure? Does my watch measure my heart rate or oxygen level or blood glucose level or any of these things? If you said yes, then that watch is more than likely infringing upon Healthgage's patent because we've got the patent that covers all that. So it's this this grand all-encompassing patent. Now, what does that mean at the end of the day? Are we going to be able to go out there and prevent every company, the Apples and Samsungs of the world from using this technology? No, and that's not the intention. The intention, in fact, in the courts, and I've had some personal experience on this in another company that I was involved with previously, where we defended our patent rights. And what ends up happening when you get into the court system is that the judges actually are not looking to award damages or to punitively award money to the company against the violator. What they're really looking to do is to have the two parties sit down in a non-binding arbitration setting and work out a licensed solution. And that's the ultimate goal of every patent case that goes in front of the courts. Is that's what the judge is really trying to do, is get an amicable settlement. And that would be our perfect world scenario as well, is to have all these various companies out there who are doing these various things to monitor and help the user improve their overall health and wellness, force them to come to us and in an amicable way license the technology from us, which we're more than happy to do. So, and how big can that be? It's impossible to say at this point is really the answer. We do know that the market in the US alone is worth many tens of billions of dollars, and that there's many big industry players who it looks very much like they may be in violation of our patent. So the potential for us to to gain significantly from this is substantial. How substantial?
So here's what I love about this. So this is the great thing. Is again, I'm looking at this purely from an investor perspective. Again, yeah, I'm looking at it kind of like I talk about this. This is I wrote this book which is about finding stocks that have 10x, 100x upside. Which we've had in the last couple of years. 10 of those that went up 10x, 50x, a bunch more. But the point is this. The ideal situation, the ideal setup is we need to find stock. Investors need to find stocks where you have this big upside potential that's not reflected in the price. Where you're getting in basically this asymmetric setup where you're getting into a stock where the value is so cheap that you really have almost no downside. Again, we're not making recommendations, advice, or whatever, but the value, the bottom line is this: AIML. How many shares are outstanding? What's in other words the valuation fully diluted is how many shares are out right now?
Fully diluted, less than 40 million. Issued and outstanding today, about 36 million shares.
Okay, so it's $40 million. So that's like basically that's less than $5 million valuation American. Less than 5 million. So basically, look at this, the way Warren Buffett would look at this and say, look, I'm paying $5 million for this company. Now they have all this other stuff which we're going to get into later, but basically it's an option, right? Potentially the payout on this patent position, I would say, is worth a lot more. Just the fundamental intrinsic value of your patent is worth a lot more than 5 million, because for, let's say, a Google or whoever is that could be potentially infringing, some of these guys might say, hey, we just want to buy these guys out. They're too much of a pain, whatever. Now they would pay much more than 5 million, but here, the way I look at this, the market is, let's say, 20 billion, the wearables market, right? And typical royalties, let's say 2% roughly, 2%, 1%.
That's not unreasonable. 2% is in the ballpark.
So we're talking about 40 million a year. Let's say 40 million a year that could be coming in, which is pure cash flow. That you're not going to get. Let's say it's not 40 million. Let's say it's only 10 million. Let's say it's only $10 million that could be coming in from licensing fees a year, right? What should the company be worth? The company should be worth, I don't know, 10 times cash flow, because basically it's a pure, it's an income stream, right? Plus you have other stuff. So could the company be worth $100 million? Potentially could be worth 50 million, 10 times that. I mean, so I'm looking at this. This is why I see this as the 10 bagger, the 10x is kind of built into the stock. Again, we're not making recommendations. We can't say these things. We're not saying like, hey, but the reality is that you have a valuable patent, and somebody needs to analyze. I think when you get into conversations with the law firms, they're going to look at this and say, hey, here's what can be done, etc. And I think what's going to happen is, once you get down the road, once there's some traction with maybe you get some settlements, maybe some licenses come in, all of a sudden then investors will realize, wow, this is legit. Because right now it's not reflected in the stock at all. Basically, the stock is trading at like almost like a public shell, basically, at the current value. Sure. It's like
you're absolutely right. The market's giving us zero value for our business potential.
Giving zero nothing. It's free. The stock is free. I mean, we're not saying we're not making recommendations, but it's basically so potentially this, if we get some traction with some settlements, which could be, I don't know, it might take a couple months, I think, right? By the time you find a law firm, they start doing their thing. This is not going to happen tomorrow. It's going to, over the next 3 to 6 months, the story will unfold. I would expect, and again, in my
past experience that involved patent infringement. It actually took longer than that before we ultimately came, to a settlement. But that was on one front. That was with one company.
But he got so many. There's probably, I don't know, countless evildoers, as George W. Bush would say. Evildoers. I mean, unintentional evildoers out there that they need to be brought in line and basically
there are a significant amount of devices on the marketplace today that that potentially are in violation of our patent. Beyond a doubt, it's substantial. And again,
I'm sorry. I'm just going to finish off on this, and we'll go into the good stuff. So for investors, I think that by itself is kind of like it's kind of I use the word in my book, built-in profit. It's the concept of a built-in profit, where it's like, the Warren Buffett methodology. I didn't invent this, but this is not. I took it from Warren Buffett, right? So you find something where you have something really big, which is not reflected in the stock price, which in this case is this IP, royalties that could be coming in, licensing, which could be worth, in theory. Again, you got a $20 billion market, 2%, that's 40 million a year. Not all of them are going to do it. Obviously, it's probably only could be 10 million. Maybe it's only 5 million. It doesn't matter. Because some of them, the stock is no longer a $5 million valuation. It becomes 10x cash flow, whatever it is. But let's get to the good stuff now. Let's talk about the real story of AIML.
Exactly. And just to finish off with the patent, I do view it as the lottery ticket. As this is the no risk but potential huge upside win for us outside of our main business model. And so that's the way I think your viewers should view it as well. That whatever comes of this in terms of licensing deals and or awards by courts for patent infringement, whatever comes of that is a bonus. Even though it could be a very, very substantial bonus at the end of the day. And there's been other cases throughout history of this. One that I recall quite vividly and fondly is every car today, with electric seats, you notice on the side of your seat, it's kind of the little buttons in shape of the seat itself. Where the back goes, back and front, and the bottom goes up and down, and it's kind of in the icon shape of a car seat. Well, that was actually patented by this little German engineer inventor, and every car company literally stole it from him and ran with it. Well, at the end of the day, he won patent suit after patent suit after patent suit, and came away with multiple millions and millions of dollars from all these car companies for infringement on that simple little idea. And that was a classic, David versus Goliath scenario, where one little guy is taking on, the huge car industry, and walked away with his pockets absolutely full, because these companies were infringing upon his patent. So certainly there can.
They may not even know about it. It's just like in your case.
Exactly.
You guys probably thought, hey, no, but this is kind of look. This is that's just business. It's there's rules.
Exactly.
World, right? So
and so while that whole segment of our potential business goes on its own course, because it doesn't tie up the human or the intellectual or the financial resources.
Which is also very important to add is this: like, in some people watching think, oh wow, how can AIML go after companies like Fitbit or Google or Apple? It's not, basically, you don't have to pay these law firms. I mean, these big law firms, they do contingency. They take on the case.
Right, exactly. And
30% or whatever it is of whatever comes in, and they'll put all their resources to work. Now, here's the thing: I think it's going to be a signal to the market as soon as you sign, again, I'm not making prognostication or anything, but as soon as like you sign one of these law firms to this deal, that is a signal to the market that this is real, because these guys are not going to get involved. A major, patent IP law firm is not going to get involved in a case like this unless they've really done their research, their homework, and they know that there is a shot that you're going to win, because they have all engineers on staff. These are not just it's not a bunch of guys from like a Better Call Saul. I mean, they have like guys who went to Stanford, MIT, who know patents. Like, look, they have like scientists basically. That's
for sure, and a lot of legal resources, and so it takes them a tremendous amount of time and money and effort to see these things through to the end. But if your case is compelling enough, they are willing to do it on a contingency basis, meaning, as you pointed out, rather than us paying them standard legal fee to represent us, they'll bear the risk and the cost, and take a bigger cut of the action on the back end, because they know that payout can be in millions and millions of dollars for them. And so this is the sort of
and this is why we're calling it a free lotto ticket. Basically, when you buy the stock, this lotto ticket is built in. It doesn't cost AIML anything. And
That's right.
You have potentially, I mean, you look at I think there's a significant probability of something good happening. I'm basing that based on the precedent of this royalty that you're getting from this company that came developed. So I think that's why I'm excited about it. That's why I think there's potentially this path, for potentially a 10x upside based on settlements, royalties, and and the cash flow coming in. It doesn't take much. I mean, your $5 million valuation. I mean, to get to a $50 million valuation, all you got to do is basically get, I don't know, something that comes out. I think if you got 2 million, you got something that was a settlement of like 2 million a year coming in of licensing. That would give the market like a signal that there's a lot more to go. And
Sure.
We've seen companies. I think Acacia Research. There's a whole bunch of public companies. I remember on NASDAQ companies that their whole business was this type of IP litigation or patent trolls, whatever you want to call them. But
exactly.
Let's talk about. It's been a while since you were on. Can you give the audience really a snapshot of the business model of the old technology? Because you have a couple of different divisions. You have HealthGauge. Give us the whole snapshot of what you're doing.
Okay, sure. So AIML, the public entity that we're here talking about today, is the parent company that holds percentages of various other health technology companies that have a specific one characteristic in common, and that's that they use artificial intelligence and machine learning to advance their technology and better their product as opposed to the competition out in the marketplace. So what we specifically invest in is health tech companies that have artificial intelligence and machine learning intellectual property attached to their products and services. So the first company that we invested in, that we now own 100% of, is HealthGauge, and that's the one that we've been talking about. And HealthGauge is this complete end-to-end health and wellness solution that gives the user immediate and actionable feedback on all the same sort of things. When you walk into your doctor's office and sit in front of your doctor, for the first 15 minutes, he's taking your blood pressure and listening to your heart and checking your pulse and checking your temperature and so on and so on. So everything that the doctors will routinely do in the first 15 minutes of that checkup, which tells them a lot about that individual's state of well-being at that particular moment. Our wearable is able to do that for the wearer 24 hours a day, 7 days a week, under all scenarios. while you're asleep, while you're exercising, while you're stressed, when you're hungry, when you're smoking, when you're flat out drunk on New Year's Eve. It's aggregating all that data, loading it up onto the cloud, onto your platform. So for the first time, your doctor actually is getting, biometric information on you, on the user, that's really meaningful because it's reflection of real life scenarios, as opposed to the once a year or once every 5 years when you're sitting in the doctor's office having a checkup. So it's giving much more meaningful data to the doctor, number one, but also to you as the wearer. And we have many examples of that amongst our wearers. A good friend of mine actually was just recently down in Mexico, and he's had a history of heart problems. And while he was out on the golf course in Mexico, he wasn't feeling well. Checked his health gauge device. It was showing that his blood pressure was up, his pulse was off, his body temperature was up. He went into the hospital immediately, and lo and behold, he had some issues that needed to be addressed immediately. We've had several other examples like that of our wearers who have been able to take immediate intervention action based on the feedback that they're given immediately from their watch. So that's on an individual basis.
Big. I mean, basically this is, there's already been documented case studies of where literally, we say life-changing. This has literally been, a life-saving device.
Absolutely.
They're alive today because they had the health gauge device.
Absolutely. Now, on the other side of the ledger, besides the wearer, you've got employers. For example, one company that we've been in discussion with is a very large transportation company, trucking company. They have thousands of trucks on the road, 24 hours a day, 7 days a week, all over North America. They need to understand the physical well-being of their drivers on the road. These guys are pulling, long hours, driving through, snowstorms, stressful situations. They've got deadlines. Some of them aren't the healthiest individuals to begin with. By throwing our device on the wrist of these drivers, the company has access immediately to the health and well-being of all those drivers on the road. So it not only makes the drivers safer, but it's giving their employer, the company, access to information that is very meaningful to them, where they can contact the driver, get him off the road, because he's the problem.
But from a business standpoint, basically what it comes down to is they're paying a couple of dollars a month for the device, or But really, from the liability standpoint, because again, this is in America, right?
Exactly.
IP litigation. This is even bigger because look, these guys pay massive insurance premiums because these trucks. Exactly. It's a big problem, right? These are multi-million-dollar cases when these things go bad, right? This is like millions of dollars, right? With a trucking accident. So I think if basically these companies know, okay, this driver, because it's very important that these guys have a certain amount of sleep there, and those are like insurance related issues. So basically they're paying you, I don't know, $50 a month or whatever it is for the device. That could reduce their insurance premium by a couple of hundred. I mean, I don't know what the numbers are, but I think the insurance companies, there's something to be had here. I know we talked about it.
Beyond a doubt, the insurance, you see, that's the other one, is the payer. So, there's all sorts of discussions that we have ongoing with various employers that have interest in the device for the logical reasons. They've come to the understanding that healthy employees is good for business. Another company that we've been in discussion with, again, a major multinational corporation with a couple 100,000 employees around the world, and they have a significant percentage of their workforce that has high blood pressure, and they discovered that that monitoring that and taking care of that in time, it's the old Ben Franklin saying, a stitch in time saves nine. From the company's point of view, if they're able to prevent, a heart attack from happening rather than reacting to a heart attack after it happened, it's not only good for their employee, it's good for the business, and the insurers love it too. And those are the other discussions that we've got underway now, as well as with numerous insurance companies that see the immediate benefits from wearables like this, and are prepared to give discounts to their customers, the insured, if those insured wear our device and the insurance company sees an improvement in their overall health. Maybe their blood pressure comes down, maybe their activity level goes up, etc. So those sorts of things will help reduce the premium and therefore save the insurance company at the end of the day tremendous amounts of money on payouts. And so they're happy to reimburse the wearer for these devices because at the end of the day it saves the insurance company huge money. That's our business model. That's really what we've been in development on for the last 18 months or so is those sorts of relationships. And they're coming through to fruition now where we're getting into a position where we're going to be able to start to announce some of those strategic partnerships.
The other thing is this, which we haven't talked about, is the kind of the outside of the B2B side where you're dealing with big companies, insurance, etc.
Yeah,
is the actual just consumers, because there's a lot of people who have they may have an elderly parent or who might be living alone. There's we have an aging population, right? Not just in the U.S., all over the world. Japan. I'm just using that as an example, and they love these types of devices there.
That's right.
And essentially, this gives you kind of that peace of mind where your mom might be wearing this device, and the health, and if something goes wrong, there could be an alert that her doctor gets an alert. So it's a very bad. Now let's talk about the economics. What's the how does it work? You buy the device. I mean, how does it work on the consumer side, on the B2B side? Give us the business model, because I know you've probably gone through different iterations. I mean, since we started.
Yeah, for sure. And of course, each discussion is slightly modified from the next based on the size of the potential agreement, the number of wearers involved, and so on and so forth. On the retail side, it's real simple. The users can come into our website, and we've got e-commerce set up, and they can buy these units for $250. What you get is the unit itself plus the free accompanying phone app, which is a really important piece to the equation. It's not a gimmick. One thing that let's say sets us apart from the Apple Watches of the world is that their technology is based on an algorithm, which is another fancy word for software, and it works well enough. But the problem with a simple algorithm is that it does the same thing over and over and over and over. In other words, if you feed in the data a million times, it will spit out the same result a million times. The difference is that our app is driven by artificial intelligence, okay, not by an algorithm. Now, the difference in that case is that as more data is fed into the system, both on you personally, so your personal health data, but also data that's being aggregated over large population bases, tens and hundreds of thousands of people, the algorithm gets smarter and smarter and smarter and more intuitive. I like to use the analogy that it's kind of the difference between a brand new doctor on his first day working in the hospital, and he's still looking through the medical guidebook, trying to make his decisions, compared to a doctor who's been doing it for 20 or 30 years.
He's seen the patterns over and over. He's seen the
right. And so he's far more intuitive and experienced. That's what the artificial intelligence.
Tim, you know what this means? What this really means is basically is because again, you know, you're essentially the whole company, the core of the business, the technology is based on artificial intelligence,
Absolutely.
AI, and machine learning, right? ML. It's the AIML. And this means basically you become more and more and more valuable every day, literally by the minute, as you aggregate more and more data. Your AI recognizes and learns the patterns. So this gives you more and more of a competitive advantage, and more of a moat.
It does, because in two ways. Number one, it becomes more accurate in terms of the actual reading of the results, number one, as compared to an algorithm. But number two, it becomes intuitive with respect to prognostication. So seeing trends develop and making recommendations to the wearer with respect to what it sees happening, good or bad, with that wearer. A simple algorithm like the Apple algorithm can't do that because it's not designed to do that. So that is, a huge differentiator between what our product is able to do and what most of the other products on the market is able to do. As the second piece, the third piece just doesn't exist. So, take your Apple Watch down to your local Apple store and say to the 18-year-old, part-time salesman who's also a student at the local university, ask him, once I aggregate all this data on my Apple Watch, how do I get it to my doctor? And he'll kind of stare at you for a minute and say, would you like an iPad to go with that, sir? It's a retail product. Ours is not a retail product. Ours is a health product. Now, so the difference is that all the data that's coming off this watch 24 hours a day is being thrown up into your secure cloud platform that only you and the people you choose, your healthcare team, for example, your doctor, your therapist, your pharmacist, your nurse, your son who lives halfway across the country, or whoever else that you want to have access to that data can have access. And it's aggregating everything that we've talked about, ECGs, blood pressures.
Yeah. One of the things I just realized, you have all these clinical trials, because we work with biotech companies right now, and they all have clinical trials going on, right? And that's a huge business. I think this is something where definitely they would want to have this device in some of these trials, because this would actually give them real-time data on how, what kind of drug interaction there is. I think this is the opportunity for what you're doing is a massive blue sky. Now, I think you were getting a. Is this registered as a medical device? In other words, you're getting FDA approval to be sold as a medical. What's the status right now?
Okay, so we are going through the FDA approval as what's called a Class 2 medical device, again, which will absolutely set us apart from any of the other competition out there. And you do that on the basis of one measurement at a time. So we've started with blood pressure. Why blood pressure? Well, because it affects such a tremendous percentage of the population, and we know how accurate our watch works with respect to blood pressure. It's reading as accurate as the medical grade blood pressure devices that you see in doctors' offices and so on. So we are in the process right now, and have been for a while, with the FDA to gain our approval as a Class 2 medical device, specifically for blood pressure.
How long does that usually take? Because I know I think you put in the application back in the summer, right?
Yeah, we did. So the first piece of the validation work has been underway at a facility called ST Innovations, which is affiliated with the University of Alberta, and their health and health tech department at the university. And so they're undertaking a clinical study right now on blood pressure, and we are expecting sometime this quarter, first quarter of 2023, for those results to come out. And little spoiler alert, we know that the testing is going very, very well. We're pleased with the results that they're seeing there. So the validation is holding up well, and so this is looking extremely promising for us to gain approval as a Class 2 medical device for blood pressure, which would be the first and only wearable to achieve that, in tandem with us having the patent. Now, what that does for us in terms of opening new doors, we've been in discussion with a couple very large, very much household name chains of pharmacies across America that have shown a great interest in carrying these products in their pharmacies once we achieve that Class 2 medical device status as for blood pressure, a medical device for blood pressure.
So bottom line is, Tim, you think that you might get the FDA approval this quarter?
So no, not the FDA approval itself, but the validation work that goes into the submission for the FDA. It's always difficult to predict when a government agency like the FDA is going to finalize their paper shuffle and come out with an approval. But we have good rapport. Our certified agent is in constant dialogue with the FDA, and it certainly looks doable in the first half of 2023.
Okay.
Of course, the FDA will never guarantee anything.
But that's another upside catalyst, because
absolutely.
I'm looking at this purely like in the Warren Buffett world. Okay, what is this? If somebody's buying this as a business, right? They're paying $5 million for this business. What's the upside for the asset to increase? I really don't care about the revenues. I care about the asset being worth more, because then somebody else will pay more. That's the reality of the market, the venture capital market, right? So you have the patent litigation potential that could be a game changer. That's a 10x upside potential. You got the FDA approval as a medical device. That could be by itself worth millions, because now you have the possibility of generating the revenues from that. So
we are without peer. Getting the FDA approval as a Class 2 medical device for blood pressure on our wearable sets us apart from anybody else out there. Nobody else has that.
What's interesting is the company. I mean, generally speaking, you've been running. Relatively for essentially, look, really the company is essentially a startup, if you will, in the reality of the world, right? It's an early stage development company. You've been running a pretty tight ship based on the resources you have. So somebody looking at this as basically they're making a bet $5 million. And what the downside is I think it's kind of limited. Where is it going to, you have all these multiple shots on goal. Basically, they just have to wait till, one of these things takes off. It's kind of like, those, I don't know, different cities. Like if you walk in Midtown Manhattan, like on Second Avenue, you see, they used to have all these like 4-story buildings, little grounds, and then, eventually those things get knocked down. Somebody puts up a 50-story in the same spot. So if you buy one of those buildings that's kind of in the way of that, at some point, all you got to do is just wait. You don't have to do anything. You just you sit there, you collect your rent, even if you don't make any money. At some point somebody's going to offer you, $50 million for your building, which is basically worth nothing, because they're right. And in multiple ways, I think this is kind of the case here.
We clearly have multiple irons in the fire, any one of which, in my opinion, could make us worth many times more than where we're currently trading. We're at less than 10% of our high from a year ago, and I know the health tech industry in general has kind of got kicked in the teeth in the last year, but wrongfully so, because what happened is the general public has tied the health tech industry to the pandemic in the early days.
Yeah,
where
this is a long term. You're part of really a mega trend. This is where in the first inning of, not even the first inning of a mega generational trend. And what's crazy is, like the teledocs. By the way, Kathy Wood, she loves teledocs. She thinks this is going to be the next big thing, and I think she's right. But here's the thing. 2 years ago, all of a sudden the market went crazy for the health tech stocks. This is when, if you had the news you have right now, you'd be worth, 100 million, 200 million easy.
It's possible, yeah.
And I think that right here, there's really a path for that, because again, all you got to do is just get some traction, and then the market's going to reprice the stock. And again, we're in a bear market. You also got to realize we've been in a bear market for 2 years in innovation, and
we are.
It's not. This is, at some point it ends, and then the market starts paying full price for upside potential. So I think, again, multiple shots on goal. What's happening with the business you have in Europe? What is it?
Tech to Heal. Yes. Yeah. So Tech to Heal is a company out of France that we have roughly 10% of their global interest, but we own 70% of the North American market, and that's really what our goal was to tie down the rights to their products throughout the North American market. Their platform has a primary focus on mental health services, and mental health has come into the forefront as kind of the new pandemic, in part because of the coronavirus pandemic, but I think it's now it's not as there was a stigma attached to mental health issues in the past, and now I think people are willing to bring it out into the open. And again, corporations are understanding that the mental well-being of their workers makes for a much stronger company. And so, for example, in Europe, the governments have made mental health care, digital mental health care specifically, part of the payer code, so that insurers and companies have to reimburse for digital mental health as they do for the conventional health interventions, and so that's bringing the digital mental health into its own reality, and bringing it across the tipping point, and making it mainstream. And Tech to Heal has some of the leading technology with respect to that in France, and it gives us some diversification. So diversification both across product lines, but geographic diversification as well, because while HealthGauge is primarily focused on the North American market, but starting to make inroads in other places like Southeast Asia and so on, Tech to Heal is primarily focused on Europe, but also has some strong connections into South America. So the investment into Tech to Heal and their mental health platform, diversifies us across product lines and geographically, and allows the companies to leverage off of each other. So, for example, some of the customer base from Tech to Heal have expressed interest or concern to Tech to Heal on certain areas like blood pressure, and asking Tech to Heal, do you have a product that can help us service our customer base on blood pressure? And Tech to Heal's answer was, well, no, we don't, but our sister company HealthGauge does, and vice versa. And so both of these companies can leverage off the experience and networks that the other company has in other parts of the world. So it makes us stronger overall.
Tim, I want to get to audience questions. We have some very good questions I want to get to in just a second here. But it looks like, I mean, essentially, you're kind of a holding company for these, disruptive innovation technologies. Really, right at, you're at the intersection of AI and healthcare. I mean, this is a major generational trend. Do you see potentially, I mean, not this week, but down the road, are you looking at other, acquisition opportunities? Because I mean, everything you have now came in through, these were acquisitions essentially. I mean,
yeah, absolutely.
Get some capital or,
Yeah, we've been in a due diligence process with one other potential acquisition now for well over a year, and it tends to be a long due diligence cycle, not because it takes us that long to understand their technology or their business, but it's important that everybody is of like mind and has the synergy needed to integrate their company under the umbrella with the other companies, not with AIML as the parent company, but with the sister companies, with HealthGauge and Tech to Heal, to make sure that each one of these companies not only doesn't compete with the other, either geographically or product-wise, but more than not competing with each other, that they have the ability and the desire to work with each other and leverage off each other's technology and market share and so on. And so getting everybody acquainted and comfortable and fitting together,
valuations are also have been coming down. So I think at some point, look, I think at some point there's going to be some opportunities, especially if the stock starts getting back on track. It'll put you in a position to, to do some deals opportunistically. Let's get to some questions, and then I want to circle back a couple other things. Okay, so we got a question here. Is there any unique technology in the patent? If there is not, then why should any other company need patent just to measure blood pressure or blood sugar?
Yes, there is. And so first, I'll preface my answer by saying that I'm, neither our technology guy nor a patent attorney, and so my answers are from, the layman's point of view and from my experience as to what's going on. But the answer is yes. There, without having something unique, you're not granted a patent. In other words, if everybody's doing the same thing, and there's no uniqueness to either our hardware or intellectual property, our artificial intelligence software, if there's nothing unique about that, we will never be granted a patent to begin with by the patent office. That is first and foremost the main criteria of being granted a patent, is that there's something demonstrably unique about what you're trying to patent. So yes, what we have is we've demonstrated a uniqueness in our configurations to monitor and measure things like blood pressure, heart rate variability, oxygen level, blood glucose, and so on. Using multiple configurations of devices, using multiple configurations of software, and so on. So there absolutely is uniqueness to our technology, which is why the patent office granted us the patents.
Okay, Benjamin is asking. I think what he's asking is what prevents Apple and Google from using an algorithm. From using AI on their
Sure, because because the patent covers multiple things. So, for example, using so on the hardware side, it's using the types of hardware that are found in all the different wearable devices. For the purpose of measuring blood pressure, that has been patented by us, okay? And the use of algorithms, but broadly speaking, so it's not just our specific algorithm that is protected under the patent, it's the use of an algorithm and artificial intelligence applied to those algorithms for the purpose of monitoring or prognosticating medical outcomes. That's been patented. So it's a very broad patent conceptually, and so it covers multiple possible combinations and permutations. Now, does that mean that it's ironclad that that an Apple or a Google can't find some way around our patent? No, I'm not suggesting that at all.
I think we got such a huge market. I think the litigation stuff, the royalties. I mean, it's a massive opportunity. Tim, I want to get to something very important, which I don't think I've ever asked you before in the live stream, or I don't remember. But it's interesting because I don't think anybody in the audience knows, but you and I actually met physically in the real world a couple of months in Florence. We had a great dinner at the Chingallo. The truffles, it was amazing, and you're a great tour guide. And you told me some interesting things I didn't know about you, which I think actually are very relevant for investors to know, because ultimately, I mean, you're the guy that's kind of going to create the value of the stock. It's not going to be promotion. It's going to be basically you, right? So tell us a little bit about, first of all, your background, and your background. You're like, and then talk about like what got you interested in the stock, because you've had a lot of success stories. You've had a lot of you've had 10 baggers in your career, creating 10 baggers, and what drew you to this. But now you were originally from, I think you said from Alberta, right, or somewhere Calgary, right?
Saskatchewan originally, born and raised on the Canadian prairies. Yes.
So and then you actually you were a professional tennis player. You were Miami, right?
Sorry, say again.
Tell us the story. So you moved to Miami in the U.S.
Yes. That's all very true. I went to school in the U.S. I played tennis for a number of years.
At a high level. I mean, don't be so modest. I mean, you said you won the Davis Cup.
High level. I played on primarily what was called at that time the Grapefruit Circuit, which was a southern U.S. Primarily based tennis circuit of second tier tennis professionals, or some of the top players who are coming off injuries and looking to retune their game and that sort of thing.
Like John McEnroe, like Andre Agassi, that type of guys.
Yeah, sure. So they all had their day, playing in the Grapefruit Circuit, either before they were top 10 players, or at some point when they were coming off injuries and that sort of thing. And so it was a competitive circuit for sure. And so I did that for a number of years, and I think that it honed my competitive nature and spirit. And
you want to win. I mean, is that right? I mean, you're in this to win. I'm assuming.
Say again. I missed
to win. I mean, AIML. I mean, this
is absolutely. Yeah, beyond a doubt. I think that whatever you do in life, do it to be your best. And if you're not going to be your best, whatever that means, because not everybody can win. Every day, somebody walks off the court winning, somebody walks off the court losing. And I got to say, some of my most memorable matches in my life were matches that I lost because I played my absolute best, and it just wasn't quite good enough. But I knew I played my best. And that's what life is all about, is every day you go out there, you give 100%, you do your best, you go out to win, and you don't always win. But you know what I've found in life is that I learn more from my mistakes than from when everything is going good. A good friend of mine is a commercial pilot, and I'll go up flying with him in his Bonanza. And when we're up at 15,000 feet, he'll say, "Take the stick," and I'll say, "I don't know how to fly a plane." He said, "Just grab the stick and hold it level," and I do. And it's dead easy. Flying a plane when it's flying level like this is really simple. What separates that from somebody who really knows how to fly a plane is being able to fly a plane when there's a problem. and that's when you know that you've actually learned how to fly a plane. And life is like that in all aspects. We've all had our ups and downs, our wins and losses, and the losses make us stronger and make us better, and we come out the other side.
So after the tennis thing, I mean, you were living in Miami. Then I think you got into investment banking. Talk to us a little about like kind of your background in the banking world, and then some of the companies, because you had some very interesting situations you've been involved in.
Yeah, sure. And I primarily the Reader's Digest version is I moved back to Canada and got into the investment world. So I learned about the investment business from that side of the street, and have been involved with the raising of several hundreds of millions of dollars for various ventures over the years. But I was heading up the underwriting department for one large brokerage firm and banking firm in Canada, and we were doing substantial dollar amounts of underwritings on a regular basis, and so I really got to learn what it took to build a successful public company from all aspects. Putting together the right management team, having the right business model, the right strategies, being in the right sector at the right time, and learning how to finance the deals in a way that was conducive to making it successful. So in the least dilutive fashion possible.
What's up till now, because we know that this is going to be a 100-bagger, but we know what AIML is. No, that's a joke, just in case anybody's watching. But up till now, what's been kind of like your biggest win in terms of where you've been involved as either on the as an advisor or as a CEO and such? Like what, so that we could learn from that. Like what's been something that we could say, okay, this is lightning is going to strike twice.
Yeah, sure. So I'm not really comfortable naming names. But I can say I've
very
been.
honest. I know you're Canadian, but try to be like very American, like just.
Yeah.
Because you spent a lot of time in the U.S. You've lived 20 years.
Yeah, absolutely. I have dual citizenship. I'm Canadian and American, and I've spent as many years living in the U.S. as in Canada, and as many years outside of North America as inside North America. So I've got a fairly global perspective on life, on the capital markets, on investing, on the healthcare markets. But some of my biggest wins, have come in the natural resource sector. Again, my background is not technical. I'm not a geologist. I'm not a petroleum engineer. But I understand how business is run, and fundamentally, at the end of the day, all businesses, boil down to the same business principles that I've been able to apply over and over, and I've enjoyed my share of successes on that front, and are bringing those experiences to the story here at AIML.
What drew your what got you interested in AIML? Like what, based on like your track record or everything, like what do you see as the opportunity here?
So a few years ago now, one of my business partners and I were looking for opportunities in a new business sector, and and we landed on, after much discussion and research, on AIML, and specifically as it pertained to the health tech industry. And we saw that it was a sector that was coming into its own. Artificial intelligence was advancing by leaps and bounds. Each year, it was growing geometrically. The programs were becoming far more sophisticated. The computer hardware driving the AI was becoming far more sophisticated. That was on the AI side. But on the health tech side, it was also an industry that was starting to come into its own. Every healthcare industry or market globally, whether it's a completely privatized system like in the US, a blended system like Canada, or a completely a publicly funded system like we have here in Europe, they all have a few things in common. One is that in all those systems, the payers, whether it's private insurers or governments or individuals, are seeing that the costs are growing, dramatically year after year after year, on the cost side. And on the other side of the equation, meaning the recipients of healthcare, they're finding that the quality of healthcare has been diminishing year after year after year. And so it's a system that was crumbling. The infrastructure that drives healthcare globally is under great stresses. I was just reading the other day, for example, in the U.S., over the next few years, they're going to be short. You're going to be short something like 100,000 doctors. These are the realities that these resources are being stretched incredibly thin, and everyone is looking for ways to take up the shortfall. And
it's like this is the right place. I mean, again, this is talk about the the 10-bagger blueprint. I mean, you're part of a major mega trend, and the theme, now the health tech theme, it was hot, 2 years ago with the pandemic. It's cooled off. But this is not going away. I mean, people need health, and
not going away at all.
More and more sick.
Yeah, not going away at all, because this is the new normal. We've now found newer and better ways to take some of the stresses and burdens off the healthcare system. The pandemic acted as a catalyst to put it to the forefront of people's minds, where for the first time, let's say chronic patients, maybe pregnant women or diabetics or people going through pain management and so on, that normally were visiting their doctors weekly or monthly or so on. All of a sudden, through the pandemic, they couldn't do that. They still needed the attention, but they couldn't physically get in front of their doctors. And for the first time, the general public was understanding the role that health technology could play. That isn't going away. We now understand that this is the new normal, and that these technologies will supplement, going forward, how medicine is administered forever.
Tim, I'm looking at this from an investor perspective. The way I see this is, look, you're basically paying $5 million for the business. You have multiple shots on goal, any one of which could, potentially be, a really a moonshot. I mean, the IP litigation, that could be something that, in theory, I I shouldn't even say the word in theory, but look, based on, we already have traction. I mean, there was traction because of you had the companies paying royalties right now. So based on the patent. So I don't think it's a question of if you're going to get revenues coming in from the patent litigation stuff. It's because we already have a precedent, right? So I think it's just a question of how much and when. And, I mean, in theory, that brings in, let's say, all of a sudden, you get a couple of licenses and $10 million a year is coming in from royalties, which is not crazy. Again, it's a $20 billion market, right? Yeah. So, I mean, if you get 10 million a year revenues coming in, I mean, I'm not putting words in your mouth. But I'm looking at what's the upside for the stock. Whenever I look at any stock, I would say, okay, what is the potential path for it to be a 10x, a 20x, a 50x? But here, in theory, it's going to sound like a crazy number, but if you get 10 million in revenues coming in, if it comes in quickly, I mean, the stock could go to a couple bucks because you only have 40 million shares at 50. Yeah, that would be only 100 million valuation.
And
we've had stocks go from nickel to 250.
To just add a little bit with respect to this prospect of licensing, I can tell you that there are other discussions underway now with other companies. We talked about how MedWatch came to us and licensed our technology because they wanted to patent blood glucose and found out that we have it already, so they did the right thing and licensed it. We are in discussion with some other companies along the same lines where they are interested in licensing our technology because they've developed products and now realize that they're in violation of our patent. And so, again, they're taking the correct path by coming to us and saying, hey, let's talk about this. So there are other discussions that are underway right now. So it's not theoretical what you're talking about, the potential for us to see significant revenue coming in from other companies licensing our technology. And again, that's all free money for us because we've done the work.
It doesn't cost you. It costs you nothing out of pocket. And basically, it's all these law firms will do it on contingency. So it's essentially, it's an incredible setup. That's why I think the stock is kind of, we look for these types of asymmetric setups where the downside is limited, and you have this blue sky upside potential. So again, you're basically an investor is paying $5 million for this, for something that could be potentially worth a couple $100 million based on multiples of cash flow, net present value, what could come in from patent enforcement, and then you have the other business. You have the actual business also, which is you were waiting for the FDA approval as a medical device. You have incredible stuff there.
Sorry, Jack. Just to finish the story about why ultimately I got involved with artificial intelligence for healthcare. At the end of the story I talked about how we were looking for investments in a new area, and we saw the advancements being made in artificial intelligence and the need in health tech. But what really put me over the finish line was I was talking to a very close friend of mine who owns a hedge fund in New York, and he does a lot of business with Jack Ma, Alibaba fame. And he and Jack Ma,
the other guy.
Yeah. And so my good friend and Jack Ma were discussing what area of investment that they're looking to collaborate together on a new area of investment, and they landed on the digital health tech field. and so when my friend asked me, so what have I been working on? I said, well, I just started up this little AI health tech company. He said, as a matter of fact, Jack Ma and I were just discussing getting into that same business. So I said, okay, I know I made the right decision. If these two guys who are a lot brighter than I would ever hope to be decided that health tech was a good place to be in, and it was good enough for me too.
Yeah, look, I mean, here's the reality is, look, this was, the market got a little bit ahead of itself a few years ago.
Yeah.
Health tech, AI, digital health, and the stocks. I mean, again, this story 2 years ago would have been a $2 stock. I mean, you were trading at like $1 plus, right? So
that's right.
But the reality is this, this is not like that's it, it's done. No, we're just in the early stages, just kind of like in the computer industry, to use that word. I mean, like, when the Apple came out in the early 80s, okay, and the stock went crazy, all those stocks went crazy, and then, and then when they crashed because, the markets, whatever, everybody said, oh, the computers, I mean, that would be like saying, hey, the computer thing is over. People were saying in the 80s or whatever, even in the 90s, this computer stuff is like, yeah, it's overrated. It's just, look, the health, digital health, AI health, it's a mega trend. It's kind of like, it's kind of where the internet was in the year, like in 1999, like literally, where we're at right now with these technologies is kind of where the net was 20 years ago.
Completely.
And I think it's just a question of time. It's a question of time. I don't know if it's, a few months or it could be a year, whatever it is, before all of a sudden something happens and health tech becomes a red hot theme again. But meanwhile, AI is hot. So I think that when investors start to see you as an AI play, which you really are, that's right. You're an AI play in health. Exactly. It's going to really get the stock moving, because again, AI is going to be a big theme this year. You got this chat GPT thing. You got all some exciting things happening. Tim, okay, let's wrap up. I know you're a busy guy. What else can what kind of news flow can we expect from you? Because you've been quiet for a while. What kind of news flow can we expect from you in the next month or so? Can we get things on a regular basis, some updates? Yeah,
absolutely, and that's our intention going forward. I mean, it's always a bit of a tightrope walk, because I mean, we're a little outfit, and everybody wears multiple hats, and there's only so many hours in the day, and so do you devote your time to building the company, or devote your time to talking about the company? And of course, the reality is you need to be somewhere down the middle between those two. You obviously have to build the company, but then the other side of it is true too. You have to get out there and explain to the world why they should be excited about you. We've been over the last year now spending a tremendous amount of time building the company, and now it's time to spend a little more energy, a little more of our bandwidth talking about what we've accomplished and what we expect to accomplish over the next short while. So we are committed to a regular news flow here going forward, and expect updates regarding. I had mentioned that we've got validation work underway on the advancement of the use of our product as a medical device for blood pressure. We're expecting to have results from that we can talk about shortly, and again, that opens a whole new world of possibility for us as being the only device out there with a Class 2 medical device clearance for blood pressure. Besides that, there's numerous strategic partnership workflows underway, and some of those we're going to be talking about in more detail over the coming weeks and months as well.
So can we expect to see, like at least 2-3 news updates a month going forward?
I think that's a very realistic target.
I know you have it. I mean, you've always had stuff going on. It's like but we should really get the word out to the market now.
Absolutely.
The stock is so undervalued, like it's crazy. People need
to know absolutely. And it's time to spend a greater percentage of our bandwidth internally on telling the world why we're this great little story, and why we believe we're worth much more than where we're trading at right now. So we're going to make that effort now.
Okay, excellent. Tim, thank you again for joining us, and thank you everybody. And we'll see you again on our next live stream. Hopefully in a couple of weeks we can get an update. Hopefully we can see some good news, maybe some on the IP front, some royalties coming in. Would be good to see.
Absolutely, that would be fantastic. So stay tuned, Jack. It's always a pleasure. I really enjoy our talks.
Tim, thank you very much. See you guys in the next live.